Ladies and gentlemen, good day and welcome to the IDBI Bank Results Conference Call hosted by ICICI Securities. As a reminder, all participant lines will be in the listen-only mode and there will be an opportunity for you to ask questions after the presentation concludes. Should you need assistance during the conference call, please signal an operator by pressing star then 0 on your touchtone phone. Please note that this conference is being recorded. I now hand over the conference to Ms. Divya Purohit. Thank you and over to you, ma'am.
Thank you, Seema. Welcome everyone to IDBI Bank's results call. Today from the management we have with us Mr. Rakesh Sharma, Managing Director and CEO, Mr. J. Samuel Joseph, Deputy Managing Director, Mr. Suresh Khatanhar, Deputy Managing Director, and Mr. P. Sitaram, Executive Director and CFO. Thank you so much for the opportunity, sir. And over to you, Mr. Sharma.
Thank you, madam. Good evening, ladies and gentlemen. It's a great pleasure to welcome all of you to this analyst meet for our second quarter financial year 23 result announcement. Thank you so much for attending this conference. I would also like to take a moment to wish everyone a great Diwali, which we will be celebrating soon. May there be an abundance of light in each one of our lives, both professionally and personally. The Indian economy today is witnessing a significant growth across all sectors, despite the inflationary hurdles and global headwinds. We are now the fifth major economy in the world and are performing better than many other major global economies. As we leave pandemic behind us, the banking system, along with our entire economy, is looking forward to a sustained growth ahead. IDBI Bank continues to move on its growth trajectory with yet another strong quarterly performance. While our CFO will present the highlights of our quarterly results to you, let me brief you some of the key highlights of our performance and growth. So first of all, the net profit. We have recorded a highest ever quarterly net profit in the history of the bank by showing a profit of 828 crore, which has 46% YOY growth and 10% QOQ growth. So the other parameters also like operating profit, net interest income and net interest margin have shown substantial improvement. The CASA ratio we have been able to maintain at 56.19%. And there has been overall growth of 54 basis points QOQ. Similarly, ROI, which we had indicated that it will be above 1%, the ROA for the quarter was 1.09%, growth of 30 basis points YOY. And on the asset quality front, net NPA is 1.15%, reduction of 56 basis points YOY and 10 basis points QOQ. We have the highest PCR of 97.86% in the industry. We, as we have been doing in the past, this quarter also we have made some proactive and enhanced provisioning, which is not otherwise required by the regulator. That is around the total, including accelerated provision on NPAs, some additional provision on non-fund-based facilities which are there in NPA, and some additional provision on the restructured assets, aggregated amounts to almost 636 crore. Other parameters like cost of deposit, cost of funds have also shown improvement, and the capital adequacy ratio also is robust at 92.48%. So with this, the parameters which are showing overall improvement, I will stop here and I will request our CFO, Mr. P. Sitaram, to give the presentation, and thereafter we can have the question answer.
Good afternoon. Happy Diwali to all of you and for joining this conversation. The bank has reported a PAT of 828 crore, which is the highest in its quarterly recorded in its history. PBT is at 1,437 crore. Operating profit of 2,208 crore. NII of 2,738. and the NIM has come at 4.37. Overall, the ROA for the quarter is 1.09 on annualized basis, and if you take the half-yearly profit, it's about 1.03%. The ROE is above 15.2. Cost to income continues to be well under control, 42.29. And capital is comfortable at Tier 1 of 17 and total CRAR of about 19.5 without taking the half-yearly profit into account. Total RWA has gone up by about 4,000 crores, 1,57,840 crores. It's mainly on the back of growth in advances. Cost of deposits stands at 3.44 and cost of funds at 3.72, more or less in line with Q2 and a marginal increase over year on year. CASA is slightly higher at 56%. The deposits have grown to 2,30,000 crores. Net NPA stands at 1.15. GNPA has come down due to recovery as well as a technical write-off, that is about 16.5%, and PCR has marginally improved to 97.86. The next slide, again we have put this PAT growth of 828 crores is a growth of 46% YOY and 10% sequentially. PBT is a growth of 86% YOY and 32% QOQ. The gap between PBT and PAT is mainly because what MD mentioned, that we have done some amount of additional provisioning conservatively. Operating profit at 2,208 crores is a growth of 64% YOY and 8% sequentially. NII has grown by 48% and 10% sequentially. NIM at 4.37 has improved by 1.35% year on year and 35 basis points quarter on quarter. The cost to income, as I said, is well under control. There is a reduction of 1.15% sequentially. Now the CASA continues to be high at 56%. The retail to corporate, as we had guided earlier, that it will remain in the range, and it continues to be in that range. Overall, we can expect that the retail to corporate will remain in this within a range of plus or minus some 62 to 68 for retail, and the balance coming from corporate. The net advances growth is 17% year on year and 6% sequentially. The net NPA, MD has already mentioned, there is a reduction of 10 basis points from last quarter, and GNPA is reduced by 3.39% from last quarter on back of recovery as well as TW. PCR has improved to 97.86, and capital adequacy, as I mentioned, is very comfortable. Coming to slide 9, you can see that the component of the net interest income, the NII, as I said, has grown by 48, out of which interest income has grown by 20% year on year and 7% sequentially. Interest expenses have also contributed to NII. There is a marginal reduction of 3% YOY, and there is a small increase of 4% sequentially. If you compare the half year, it's about the 20% increase in the NII, mainly on the growth of both interest income and also a reduction in the interest cost. The other income, again, in the other income, there is included a gain from the sale of our stake in the life insurance joint venture that we had with AGS. That balance stake which we had has also been transferred, and we have recorded a gain of 380 crores, which is included in the other income. In Q1 also, we had a similar gain of about 140 crores from sale of assets. So overall, the growth in other income is about 11% YOY and a marginal reduction of 5% from last quarter, mainly because of the non-repeat of the gains from sale of DSEC, which we had recorded in the first quarter. Now the OPEX has increased by about 9% from last year and 3% sequentially, mainly due to increase in the employee cost. The employee cost has mainly gone up because of, one is that headcount has started increasing. Now that we are out of PCA, we are allowed to recruit, and of course the business is growing. And secondly, the accumulation of leave for the employees has also gone up, and the valuation is now at the higher the salary rate that we had settled last time. Some amount of variable pay component has also come in this quarter. So overall, therefore, the OPEX has grown by about 9% compared to last year, 3% sequentially. Half year to half year, about 12%. So after all this, so we are having a net profit growth of 64% to now 2,208 crores and 8% growth sequentially. And half year to half year, if you compare, it's about 1%. If we exclude this the gains from strategic sale, the operating profit has shown a growth of 36% year on year, and a small reduction of 4% from last quarter, mainly because of that capital gains from the GSEC, which is not there. And overall for the half year, if you compare, it's about 11% less. The provision contingencies are higher by 35%, both due to statutorily required regulatory provisions, plus whatever we have voluntarily on a conservative basis made additional provision, both for NPAs as well as for restructured assets under COVID, etc. The PBT has shown a growth of 86% year on year and 32% sequentially. PAT is grown by 46% to 828 crores, which is also a 10% increase over last quarter. If we come to the next slide, we have shown the breakup of each component which has contributed to the growth of the PAT from 567 to 828 crores, in which you will see that there is all the components have contributed. However, the increase in the tax requirement has taken away about 401 crores. Similarly, for the half year, from 117 to 1584, again, mainly the NII has contributed to the growth in the bottom line, but obviously the increased tax requirement has taken away some of that. Now we come to the next slide, which is the breakup of NII. Here you can see that the contribution to the growth in NII has come from a healthy growth of interest on advances, that is about 21% growth year on year and 15% growth sequentially. And income from interest on investments has grown by 16% year on year, but sequentially it is at the same level. Other interest income, which includes some amount of interest on refund of income tax, that has grown by about 30% year on year, and compared to last year we didn't have so much of interest on refund of income tax, so that's reduced by about 31%. Overall, if you compare half year to half year, there has been a growth of 53%. And interest expenses has total have degrown by about 3% from last year on year, and grown by about 4% sequentially, mainly because of the lag effect of the increase in interest rates that we have been affecting. And NIM, if we exclude this interest on IT refund, the NII stands at about 2,644 crore, which is a 43% increase YOY and 14% increase sequentially. And NIM stands at 4.22, which is an improvement of 1.2% compared to last year and 50 basis points sequentially. Coming to the next slide, this is the breakup of the other income. As I mentioned, that there is a gain of 380 crores coming from the sale of our stake in AGS Federal, and last quarter also we had a gain of about 140 crores from RC. These are included under the head profit loss on sale of investment. Otherwise, the commission exchange brokerage, that income has more or less remained same compared to last quarter and grown by about 10% year on year. And the revaluation is subject to the movement and the quarter end interest rate. We had a total reduction in the revaluation hit as compared to September 1. We have only 7 crores this time, and compared to 66 crores of June 22 quarter, it is 89% reduction. The forex income has also slightly declined. It has come down by about 17% YOY, sequentially also 21%. Dividend income, all the 3 subsidiaries have contributed to this. And recovery from a return of cases is the principal component that we have here. And here it is about the 26 crores for the quarter as compared to 137 crore in last year, that is 81% reduction and 35% reduction from the last quarter. Overall, the miscellaneous income also come down by about 63% from last year and 82% from sequentially to 18 crore. So overall, the other income has shown a growth of 11% year on year and 5% reduction sequentially. The provisions and contingencies, here you can see that we have a provision for standard asset component, which is we have made about 339 crore on it. And last quarter also we had done about 411 crore. Similarly, for the provision for NPAs, we have made, as I said, even additional provision. The slippages have been on a net basis hardly about 20 crores. So, but as I said, we have made additional provision for NPAs. The figure here is showing net mainly because one NPA converted to equity shares. Therefore, the amount of provision that was held for that NPA has got transferred to depreciation on investment, that provision for investment. So, therefore, there is not a net reduction. There is a movement from one head to other. Otherwise, we are continued to make anticipatory and conservative provision for NPAs also. Then, so net the provisions total have gone up by 601 crores compared to year on year, comprising both of regulatory requirement as well as the additional voluntary provisions that we have made. This has also increased by about 85% if you compare serially. The next slide shows the movement. Yield and advances has improved mainly because of again the impact of the changes in RLLR that we are doing and also the lag effect coming from MCLR revision. NIM has improved to, as I said, this 4.22 is without taking into account the interest on refund of income tax. The cost to the net income has remained steady more or less at 43%. The next slide is shown this cost of funds and cost of increase the deposit rate slightly behind the market, mainly because we don't want to pay a leader function here. But the revision in the deposit rates will gradually have an impact on the portfolio. We would see some amount of increase in the amount of the cost of deposit, but we expect that we will also see a corresponding improvement in the advances side, so that we'll be able to maintain our NIM at the healthy levels that we have currently. On slide 17, this is the balance sheet. You can see that we have grown to 3,09,000 crores approximately. Now, going to slide 18, as I said, the total deposits have also improved to 2,30,000. CASA has improved. The composition of deposit more or less remains same. We are looking to where we need additional requirement. We are strategizing to increase the deposit rate as to respond to the market moves made by other banks. Along with that, we would also be pursuing now to mobilize more bulk deposits. In the previous few interactions, we had indicated that there is some scope to increase the composition of bulk deposits because we are at quite a low place here. So we'll look wherever we find it competitive. We'll be raising bulk deposits, and we can see that 5.5%, even going up to say 8 or 10% or slightly beyond that. On the business performance, again the next slide, that is the savings deposit has shown a growth of 5% YOY, but more or less on level with the last quarter. Retail deposits also have grown by about 2%. Current deposits has grown by 7%, but this is slightly volatile. Okay. And the bulk deposit, as I said, Q on Q, we have grown by 11%. This is the strategy. So I think QOQ, sequentially over the current year, you will see a little growth on this side. And on the business performance and advances, more or less, as far as in terms of interest composition of the components of the advances, it has remained steady sequentially as compared to last quarter. Our strategy remains the same, that we will continue to pursue a differentiated, granular approach to build up more retail business, and we will follow a calibrated approach towards the corporate book. We are examining all the types of avenues that we can exploit in terms of enhancing our relationship with both the existing mid-corporate or those mid-corporate that are there in our book earlier but had to exit during PCA regime, as well as also to generate business from erstwhile mid-corporates with whom we didn't have relationship earlier. Large corporate also will be looking at, but that will be on with a lesser emphasis. Now coming to business performance, this is the gross advances have grown. Out of that, the standard component has also grown, you can see, on the back of mainly the growth in retail, which has registered about 4,800 crore increase. Now, on the corporate retail ratio, as I mentioned, that this will always now remain within a range. That has been our strategy, and the net advances have grown to 1,46,752. Coming to the next slide, this is the priority sector. We have achieved all our targets. The amount of PSL deposits that we have are gradually coming down with the dates of repayment on the scheduled maturities. Coming to slide 24, this is the investment breakup, the AFS breakup. Again, there has not been much of a movement from the last quarter. We will, to the extent that we have booked gains from transfer of securities or direct sale from STN, we'll look to build back that thing to some extent. So you'll see some build up on that portfolio. Otherwise, I think the market duration of the AFS portfolio is quite under control at 1.27. Next, if we come to page, that is the slide 26, this is the provisioning we have for the COVID portfolio. Last June itself, that we had taken it down to two components. One was the 116 crore as required by RBI regulation, as well as 360 was also as required by RBI regulations for the FITL and other mandatory provisions for arising from COVID restructuring. That's total 476. That has marginally gone up to 486, mainly because RBI has clarified in August that the percolation of these accounts also should be provided for. This came in mid of August, and that provision also we have done. The contingency provision, which is something which we have done, anticipating that some stress may emerge out of this portfolio, that we have taken it a little higher this time. Not because of there is an increase in SMA 1 or 2, but we want to see the year play out fully. We would like to wait till March 23 before we feel that okay, that most of the path has been negotiated. The experience in the first half has been very encouraging. The slippages have not at all been to the extent that it was apprehended during the beginning of the year. Yet we continue our conservative stand as far as provisioning is concerned. We enhanced that amount of provisioning to 980 crore. Therefore, about 1,000 crores additional we are keeping on a voluntary basis. The next slide is on the PCR. Therefore, it has crept up to 97.86 with the additional provisioning that we have made on the doubtful 2 category. So now, if you look at doubtful 2, almost 50% is now fully provided, and the remaining 50% is provided to about 64%. So now the overall, therefore we have both in doubtful one, we have about 1/3 of the portfolio provided at 100%. Doubtful 2, we have about 100%, and probably we have the highest PCR in the industry now, perhaps at 97.86. On the NPA movement, slippages first time and the increase in existing NPA have come to about 663 crore. The settlements and upgradation aggregate to about 640 crore. Therefore, the net increase is only about 23 slippage this time. And we are proposing a write-off of about 5,200 crore, which has been. So overall, the closing balance is lower by about 5,200 crore, that is 28,726. The slippage ratio, after taking this into account, the slippage of is coming to about 1.31. Okay. This is for the after taking then the credit cost for the quarter has come to about 0.18. This of course is because, as I mentioned, this also takes into account that the movement of the FPA provision. It is not likely to remain at this subdued level of 0.18, but definitely we are expecting that it will remain at about 1% or lower than that for the current year. Next slide is on the NCLT. Is a summary of the position. I will not go much into detail on this. On the next slide, on the SMA position, again I will not dwell much on this. It's quite well under control as compared to last quarter. It has marginally improved. The last slide on the capital adequacy, again I will just mention that the increase in RWA, which I said earlier, has come due to increase in credit risk weight, slight increase in market risk, and overall capital adequacy, all our figures are comfortable. Leverage ratio is 7.5%, which is quite comfortable. And the last slide is on the shareholding pattern. Again, here there is nothing much to say. There is not much any big change in the shareholding pattern compared to last quarter. So we come to the slide 35. These are the customer-induced financial transactions on the digital basis. We have not yet set up any DBU to anticipate a person, but we do have plans eventually to do that. As of now, this entire digital footprint is through the existing digital offerings that we have by way of both ATM, online, the banking, mobile app, and all other alternate channels. So you can see that there is a significant, about 95% of the customer-induced transactions are now going through the digital channel, out of which UPI has taken the lion's share. So next is just giving a breakup of the digital footprint. I will not take up your time on this, nor will I take you for your time for the next slide. This is a report on where we stand as far as the financial inclusion is concerned. The next slide, 2 slides are on the financial inclusion. When we come to the subsidiary slide, all the subsidiaries are reported gain for this quarter. And looking ahead for the guidance, I request.
So now the guidance part, of course, we had at the beginning of the year, we had given certain numbers. So as you will see from the presentation which our CFO has made, we have overperformed on almost all the parameters. As regards the business growth, advances as against 10 to 12% target, we have grown by 17% in net advances. That ROA is also above 1%, and the slippage ratio is well within control. It as against our estimate of 2.5%, it is 1.31, and the credit cost also is lower than that. ROA and ROE also we have been able to improve. And NPA level we had indicated that net NPA is at 1.25%. So it is we have already reached 1.15%. As far as gross NPA is concerned, we had indicated that we will be below 15% by 31st March 23. Now we have reached almost 16%. So that way we, with the transfer of some assets to NARCL, which are identified for transfer, and now NARCL has already started giving some offers. So with that, we expect that some assets will be transferred to NARCL by 31st March. We will be much below the 15%, the number which we had indicated earlier. NIM, as against 3.25, it is 4.37. Even if we exclude income tax refund interest, then also it is 4.22, and we are quite comfortable here. And the digital footprint also, we have started a lot of initiatives have been taken. We have done a tie-up arrangement with for supply chain finance also, and the cost to income ratio also is much below the expected level. So as we had indicated, so we have overperformed in all the parameters, and we are quite hopeful that this type of performance we will be sustaining, rather we will be able to improve on the performance. Now we can take questions if any questions are there, and we can go ahead. Thank you very much.
Thank you very much. We will now begin with the question and answer session. Anyone who wishes to ask a question may press star and 1 on their touchtone phone. If you wish to remove yourself from the question queue, you may press star and 2. Participants are requested to use handsets while asking a question. Ladies and gentlemen, we wait for a moment while the question queue assembles. Thank you. We take the first question from the line of Mr. Sanjeev Kumar Damani from SKD Consulting. Please go ahead, sir.
Namaskar, sir, Sharma Saab and CFO Saab. Sir, am I audible? So I continue.
बिल्कुल आपका आवाज हमको सुनाई दे रहा है. धन्यवाद. आप कृपया क्वेश्चन पूछिए.
सर कुछ क्वेश्चन तो मेरे लर्निंग के लिए होंगे और कुछ एक्सप्लेनेशन के लिए होंगे. तो पहला प्रश्न ये है सर कि ग्रॉस और नेट एडवांसेस में क्या फर्क है सर?
Gross advances direct the provisions that have been made for non-performing asset, that is net advance.
Gross advance is bigger and net advances are lower. Am I right, sir?
That is right. Gross advances minus provision for non-performing advances is net advances.
Sir, here when I was seeing in the slide, the gross advances figure was bigger.
Yeah, gross advances minus provision for NPA is equal to net advances. So gross advances will be higher.
Okay, got it, sir. Second, my question is regarding investment in the shares of National Stock Exchange. Are we still holding them or they are also disposed?
We have no holding in National NSE.
Acha, you don't have any. Okay, sir. Acha, secondly, sir, you know that the company is going for divestment by Government of India and both. So in the process, I mean, have we identified, certain assets which have very big value in the sense that some of the buildings, land, etc., that IDBI is holding or having offices at various places all over India. So, I mean, have we thought of this while, recommending our divestment, that these assets should be either taken out or realized before giving it to any third party?
And that, first of all, that transaction is from the owner side, that they want to sell shares to someone else. So the bank by itself need not do anything because of that. And secondly, we are following the accounting policy as per our Indian GAAP, which is presently there, which requires the revaluation of fixed assets on a periodic basis.
Okay.
So the last revaluation that we have done once in 3 years we keep doing. And so the impact of the current valuation is already reflected in the balance sheet. Investments are also, as per RBI norms, mark to market. Therefore, maybe market valuation आएगा.
Right, sir. Acha, we have shown certain investment of debenture 3166 crore and some total 93,148 crores worth of investment has been there apart from deposit with RBI. So these 93 crore investment is at book value or it is realizable value in the presentation?
As I said that, see, the RBI, we classify the investment into 2 categories broadly. One is called held to maturity, and that is held at the value at which we have invested. And the other is comprising of either available for sale or held for trading. Together, these are the mark to market constantly, and whenever we declare result, it is at the latest values we report.
Okay, thank you very much, sir. And sir, regarding NPAs, when you refer to NCLT and matters are under obligation of NTSC settlement, So they are already written off from the books of account as it is.
No, not necessary.
Not necessary. They're non-performing. But how much provision we make and whether we write off, all those are voluntary decisions.
Sorry. I'm very sorry. But actually, I should have said that whatever matters are disputed, referred to NCLT or are under negotiation, for that much value, provision is already made as NPA in the books of account.
The provision for NPA is determined by the rates at which RBI is mandated. There's a calendar rate of provisioning, we make that. Plus there are other rules. As per RBI, we make additional provision. And the third, over and above that, the bank can make an assessment and even make even higher provision as per the management. So these are the three components of NPA.
You very much, sir, told about this, that you have made higher provisioning of 1,000 crore extra over and above the required one. Am I right, sir? You said that.
और हमारे NPA पे तो ऑलरेडी आपने देखा होगा कि 97% जो है हमारे ग्रॉस NPA हैं वो ऑलरेडी प्रोवाइड किए जा चुके हैं.
किए जा चुके हैं.
सफिशिएंट प्रोविजन. थैंक यू.
एक मेरी और रिक्वेस्ट है फाइनली सर कि अगले प्रेजेंटेशन में सर ये डाटा जो आपने भेज दिया है ना, इसको रिपीट नहीं करेंगे तो समय बच जाएगा सभी का, ऐसा मेरा मानना है. फिर आप लोग ही नक्की कर सकते हैं कैसे करना है ऐसा.
ओके.
मेरे को डाटा इज ऑलरेडी गिवन सर टू अस.
श्योर.
थैंक यू सर. थैंक यू वेरी मच फ्रॉम माय साइड एवरीथिंग. ऑफ कोर्स आप अभी कोई डिसइन्वेस्टमेंट पे आप लोग कमेंट करेंगे नहीं सर. हमको बहुत जिज्ञासा है जानने की कि क्या होगा, डिसइन्वेस्टमेंट हो पाएगा नहीं हो पाएगा, कोई बायर मिलेगा नहीं मिलेगा, ऐसा सब सोच रहे थे हम लोग. कोई कमेंट आप लोग कर पाएंगे सर?
No, we will not be able to make any comment on the divestment.
Okay. Thank you very much, sir. Thank you.
Thank you, sir. A reminder to all the participants, anyone who wishes to ask a question may press star and 1 on the touchtone phone. Reminder to all the participants, anyone who wishes to ask a question may press star and 1 on the touchtone phone. We take the next question from the line of Mr. Pranav from Rare Enterprise. Please go ahead, sir.
Hi, thank you, sir, for the opportunity. Sir, from the publicly disclosed document of DAPM, they are saying that 22,500 crore is the minimum net worth required. So I'm saying I don't want any data that is private, but they have publicly said that in the document, divestment document. So can you just spend some time on explaining this 22,500 crore net worth at a NOFHC level, that is non-operative financial holding company. At that level, this net worth could be contributed by consortium or a single player, and also is there a leeway to contribute that by debt? So for example, 22,500 crores is required to be invested, is required to be the net worth, and whatever is said today, there was a news that $7.7 billion is expected out of your value, and 61% of that would be held by NOHFC or the bidder. So can this be contributed at a NOFHC level by debt?
Thank you very much for asking, but please forgive me for saying this, that one, in that EOI itself, they have clarified that if any questions, written questions you require, any queries are there on the offer document, so by 28th October, you can raise the queries to one Mr. Hitesh Sachdeva in KPMG. So right. I will request you to please direct these questions, because this entire process is being arranged by the transaction advisor.
Right.
Thank you.
Right. Perfect, sir. So I will come back in the queue after some time.
Thank you very much, sir. A reminder to all the participants, anyone who wishes to ask a question may press star and 1 on the touchtone phone. We take the next question from the line of Nitin Bhalla, individual investor. Please go ahead, sir.
यस सर, मैं ये पूछना चाह रहा हूँ कि इस बार आपके जो रिजल्ट्स आए हैं, इसमें आपने 600 करोड़ का टैक्स दिया है सर, 608 करोड़ आई थिंक. तो सर व्हाई द टैक्स इज सो हायर दिस टाइम?
उसका दो कारण है. एक तो एक जो डिफर्ड टैक्स हमने पहले प्रोवाइड किया था प्रोविजन के ऊपर, वो अभी कुछ प्रोविजन उसमें से एक्चुअली इनकम टैक्स अलाउ कर दिया है. तो जितना अलाउ कर दिया उसका करस्पॉन्डिंग डिफर्ड टैक्स हमको राइट ऑफ करना पड़ा, तो वो एक कंपोनेंट है। और दूसरा है कि अभी बिजनेस लॉस के अलावा और भी जो भी इनकम है उसके ऊपर अभी ज़्यादा कुछ कैरी फॉरवर्ड लॉस बचा नहीं, तो उसका जो टैक्स इफेक्ट आता है उतना हमने प्रोविजन भी किया है, और बाकी है जस्ट नॉर्मल कोर्स हमको जो प्रोविजन करना पड़ता है उतना का।
तो क्या सर इतना हाई टैक्स स्लैब आगे आने वाले क्वार्टर्स में भी इतना ही हाई टैक्स स्लैब रहेगा सर, क्या लग रहा है आपको?
नहीं, जैसे मैंने कहा अभी तो वो जो डिफर्ड टैक्स जो हमने किया है एडजस्टमेंट वो तो रिपीट नहीं होगा, तो आगे चलते वो नॉर्मल रेट पे ही होगा।
ओके, नॉर्मल रेट पे होगा। अच्छा सर, सेकेंडली मैं ये पूछना चाह रहा हूँ कि जैसे सर IDBI बैंक इतने सारे क्वार्टर्स के बाद लॉसेस के बाद इतने सभी क्वार्टर्स में प्रॉफिट में आ रहा है, शायद 6 क्वार्टर है ये प्रॉफिट का, एंड प्रॉफिट इज इंक्रीजिंग एवरी क्वार्टर टू क्वार्टर। बट मैं ये देख रहा हूँ सर हमारे जो वो आपके डिपॉजिट्स हैं वो उतनी स्पीड से बढ़ नहीं रहे सर, डिपॉजिट।
हाँ, तो इसमें 2 कंपोनेंट है। पिछले साल तक हमारे पास सरप्लस लिक्विडिटी था, तो अभी ग्रोथ तो अभी शुरू हुआ है, तो शुरुआत में हमको जो एक्सेस लिक्विडिटी था उसके हमने इस्तेमाल कर लिए हैं, और हम देख रहे हैं कि मार्केट में इंटरेस्ट रेट किधर जा रहा है, दूसरा बैंक क्या कर रहा है, हम उनका हिसाब से देख के हम भी धीरे धीरे इंटरेस्ट रेट बढ़ा रहे हैं। तो आगे चलते अगर जितनी डिपॉजिट की जरूरत बढ़ेगी तो हम भी इंटरेस्ट रेट से एडजस्ट करके डिपॉजिट की ग्रोथ बढ़ाएंगे। आप देखेंगे तो कासा के जो कंपोनेंट है मेनली इसमें वैसे काफ़ी क्वाइट हाई इन द इंडस्ट्री। हम जो कंपोनेंट हमारा कम हो गया वो है बल्क डिपॉजिट, जो हम आसानी से वापस ले सकते हैं जब जरूरत है हमको। तो हम देख रहे हैं, हम भी वही सिचुएशन को पूरा डे टू डे मॉनिटर कर रहे हैं, और जैसे हमारा जरूरत पड़ेगी वैसे हम डिपॉजिट की और भी मोबिलाइज करेंगे और बढ़ाएंगे।
और सर ये एक लास्ट क्वेश्चन है सर, कॉर्पोरेट लोन्स आप कितनी एग्रेसिवली आगे देना चाह रहे हैं? कॉर्पोरेट लोन, बड़े लोन्स, बिग लोन्स, जैसे आपने हाउसिंग में तो बहुत अच्छा किया है अभी पीछे सभी क्वार्टर्स में देखा, बट कॉर्पोरेट लोन्स में बहुत बड़ी ग्रोथ नहीं दिख रही सर, तो उसके लिए आगे क्या प्लानिंग है आपकी सर?
अभी देखिए कॉर्पोरेट ग्रोथ में भी अगर आप पहले नहीं थी, पहले जब हम PCA में थे तो हमारी कॉर्पोरेट में ग्रोथ 4 साल नहीं हुई, इसी वजह से जो है वो जो एडवांसेस का लेवल था वो कम आ गया। पर जब से हम मार्च 2021 से PCA से बाहर हुए, कुछ समय थोड़ा एडजस्ट करने में धीरे धीरे हमने ग्रोथ, एकदम हम नहीं चाहते कि एकदम से बहुत ज़्यादा ग्रोथ की जाए, पर अगर आप इस क्वार्टर में देखें तो वो YOY यानी सितंबर 21 में जो हमारे एडवांसेस थे कॉर्पोरेट के, और अभी जो है नेट एडवांसेस, क्योंकि ग्रोथ के लिए अपन को नेट एडवांसेस देखना पड़ेगा, उसमें टोटल हमारी 17% की वृद्धि हुई है, जिसमें रिटेल में जो है 14% की हुई है और कॉर्पोरेट में 28%, क्योंकि बहुत सारे जो कॉर्पोरेट्स थे पहले हमारे साथ लिमिट यूटिलाइज नहीं कर रहे थे, और एक अच्छे ग्रुप की भी हमने एडिशनल लिमिट सैंक्शन की है। तो जब से हम PCA से बाहर आए हैं, शुरू में थोड़ा कम स्पीड पे हुआ, अब नॉर्मल स्पीड पे हमारी ग्रोथ स्टार्ट हो गई है, और आगे भी ऐसे हमें उम्मीद है कि 14-15% की ग्रोथ चलती रहेगी।
अच्छा, 15% की ग्रोथ आप आगे आने वाले क्वार्टर्स में भी?
हमने जो स्टार्ट में साल के शुरू में जो ग्रोथ एस्टिमेट की थी वो हमने 10 से 12% की थी, बट अभी जैसे जो अच्छी ग्रोथ हो रही है और मार्केट के सिनेरियो को देखते हुए हर बैंक, हम भी इस बार मिड टर्म रिव्यू करेंगे, सितंबर के रिजल्ट्स के बाद में मिड टर्म रिव्यू करेंगे, फिर रिवाइज करेंगे कि कैसा मार्केट में सिनेरियो है, जैसा मार्केट में डिमांड होती है उसी के हिसाब से ग्रोथ को एडजस्ट करना पड़ता है। और जो नॉर्मल ग्रोथ, ना तो हम बहुत ज़्यादा अधिक ग्रोथ करना चाहते हैं ना कम, जो नॉर्मल ग्रोथ है जिससे हमारी क्वालिटी ऑफ एडवांसेस उसको हम मेंटेन करते हुए अच्छी ग्रोथ कर लें।
सर मार्च 2023 से पहले जितने आपके जो बैड लोन्स हैं सर, उसमें कितनी रिकवरी करने की आप आगे उम्मीद है?
इस साल में 4000 करोड़ की रिकवरी जो है वो एस्टिमेट की थी, और ऑलरेडी जो 2 क्वार्टर है, मैंने पहले क्वार्टर में 1136 करोड़ की रिकवरी हुई थी, दूसरे क्वार्टर में 924, इस क्वार्टर में 924 करोड़ की है, तो 2060 माने 50% से अधिक हम रिकवरी कर चुके हैं, जो हमारा टारगेट था। और हमें उम्मीद है कि हम जो पूरा 4,000 करोड़ का टारगेट हमने लिया है वो हम रिकवरी कर पाएंगे।
सर नेक्स्ट फाइनेंशियल ईयर में क्या, नेक्स्ट क्वार्टर या उससे आने वाले क्वार्टर में क्या हम 1,000 करोड़ से ऊपर का प्रॉफिट देख रहे हैं अपने बैंक में?
देखिए, आपने पिछले जब से हम मार्च 20 में प्रॉफिट कमाना 135 करोड़ से शुरू किया था, वो उत्तरोत्तर आपने देखा हर क्वार्टर में अच्छी ग्रोथ चलती रही है। तो इस होता है तो हमारा टारगेट जो है बिजनेस बढ़ा करके, एनपीएस हमारी जो है स्लिपेजेस कम करके, रिकवरी करके सब पूरा वो रहेगा। बाकी कितना प्रॉफिट आना है उत्तरोत्तर वृद्धि होती जाएगी। अब देखते चलिए आप।
सर अब आप जितनी मेहनत कर रहे हैं ना सर, मैं तो बहुत समय से आपका बैंक को ट्रैक कर रहा हूँ, बड़ा शेयर होल्डर भी हूँ। मेरे को बस आपके साथ जस्टिफाई प्राइस में नहीं हो पा रहा है सर, बस ये एक
वो मार्केट का एक्शन है। हमारा देखिए ग्रोथ में परफॉर्मेंस हो रही है, वो हम सुनिश्चित करेंगे। बाकी सब जगह से अच्छा ही होगा।
मतलब आने वाले समय में आप यही 17 से 20% का ग्रोथ देख रहे हैं, 15 से 20% के बीच में?
अभी मैंने जैसे बताया मिड टर्म रिव्यू करेंगे, उसमें बोर्ड के साथ में हम परमिशन से अप्रूव जो भी होगा उसी हिसाब से आपको सूचित करेंगे।
धन्यवाद आपका सर, बहुत बहुत धन्यवाद, थैंक यू सो मच।
Thank you very much. A reminder to all the participants, anyone who wishes to ask a question may press star and 1 on their touchtone telephone. Reminder to all the participants, anyone who wishes to ask a question may press star 1 on the touchtone phone. We have another follow-up question from the line of Mr. Pranav from Rare Enterprise. You may go ahead, sir.
Thank you, sir. Sir, could you spend some time on explaining where the credit demand is coming up? Also, will this credit demand increase or decrease going forward for 2-3 quarters? That is first question. Also, second question is that do you think that short-term rates will even spike from here? Because I think after a lot of time, banking liquidity, that is LAP, has become negative, in deficit. So can short-term rates spike even higher from here? And in that case, will it be more prudent to improve deposit rates before everybody else so that you can get incremental volume of deposits? Thanks a lot.
Yeah, credit growth is driven by different factors in the different segments. First, on the retail side, though there was a lot of fear that credit growth will be very tempered because of the increase in interest rates, I think we are all being proven wrong. That despite increase in interest rates, a lot of pent-up demand in consumer financing, home loan financing is showing up, and there is no let-up in the demand for retail credit growth as well. Now coming to corporates again, the drivers, investment cycle seems to be picking up, but even before that, those projects are still in the drawing board. Drawdowns are yet to happen, sanctions are happening, but drawdowns are yet to happen. But the utilization of credit by corporates is going up, mainly because of the inflationary impact, the commodity price is going up. There is an uptick in the capacity utilization levels also across the corporate sector, across all industries. Hence, there is a higher utilization of working capital limits already sanctioned. Also, some demand has come from the bond market to the loan markets now because of the prices, because of the rates in the bond market having reacted more sharper than in the loan market. So there is a host of factors which is driving up the credit growth. You would have seen almost all the banks. In fact, RBI latest published data says about 17% has been the credit growth in the last month's reporting Friday, and we are also, if you look at our credit growth is also, we are also almost there. Going forward, the outlook, I think it should hold up. The credit demand should hold up because, as I said earlier, the investment cycle is again back. The private sector investment, which was very low in the last 3 years, is back on the table. So, fresh capex and also both brownfield and greenfield investments are happening. So that should push up credit demand. So From the demand side, I think credit growth should be quite robust in the next 2 years going forward. Now coming to the second part of your question on deposits, growth in deposits or the liquidity, I think we are already seeing some action from all the banks. Banks are increasing deposit rates. There is some chase for liability relationship deposits as well. But specifically about IDBI Bank, as CFO in his presentation said, to begin with, we started with a huge liquidity. Our LCR was above 140%. So to some extent, we have used up that excess liquidity. Even now, our liquidity is quite comfortable. So if need be, we can tamper with the rate. We can increase the rate on the bulk deposit, because the headroom to increase our absolute bulk deposit is much higher today. 3 years back, when our bulk deposits were about 70,000, 75,000 crore, we have brought it to about 10,000 crore now. So there is a lot of scope. We can increase. It's a factor of, as you know, bulk deposits are a factor of the interest rate. We can play on the interest rate for bulk deposits and increase our deposit size also. So there is no concern as far as our bank is concerned.
Okay, sir. Thank you. Thank you.
Thank you very much. Ladies and gentlemen, that was the last question for the day. I would now like to hand the conference over to the management for closing comments. Thank you, and over to you, sir.
Thank you, madam. And let me conclude by stating that as we move forward, there will be a lot of pleasant surprises. Overall, IDBI Bank is posting good performance every quarter, and we are committed to enhance it further, sometimes bettering our projected number on select parameters as we did in the previous quarter. I again express my gratitude to all of you for your presence here and wish you a very happy Deepavali. Thank you very much.
Thank you. On behalf of ICICI Securities, that concludes this conference call. Thank you for joining us, and you may now disconnect.